You're listening to Indications by the Conference Board.
Welcome to Indications at the Conference Board. My name is Bart van Ark and I'm Chief Economist at the Conference Board, and welcome to this episode of Indications, which will be on our Consumer Confidence Index for the month of June. And for that, I'm being joined by my colleague Lynn Franco, Senior Director for Economic Indicators at the Conference Board, to take us through what we have learned from today's index. Lynn, thanks for joining us.
Good to be back, Bart.
So, Lynn, let's start with obviously the headline number. And the headline number has seen a bit of an increase. It has increased from 85.9 to 98.1 to be precise. So that's about a 12-point increase. That's a pretty nice number after some months of some challenging months, as we all know, given the pandemic and all the aftermath of that we're currently facing. But Lynn, I think the question is a 12-point increase. Is the glass filling up? Is it half full, or is the glass still half empty?
It's both. And the reason that I say that is because if you take a look at the present situation index, which accounted for the majority of the increase in consumer confidence, that's currently at 86.2. It really indicates that the overall economic environment remains weak. And let's not forget that that particular index dropped by a historical 100 points over the last few months. In terms of people's expectations looking ahead, we had a more moderate increase. And basically because they're less pessimistic about the future, they're not really foreseeing a tremendous, pickup in activity. And one more factor is too, this survey was taken in sort of the first half of June. So we didn't capture some of that resurgence that we're seeing now in, Arizona, Texas, and Florida. And that could dampen consumer confidence, both, in July and the coming months.
Yeah, so let's first talk a little bit about that, because that's obviously, the hot news. To what extent, the current increases in cases in southern states and some western states, to what extent they will be impacting consumer confidence. Because overall, these states were having pretty high levels of consumer confidence. We had relatively many optimistic consumers in those parts of the country. Do you think that's really going to get a big hit now?
It could. For instance, in Texas, confidence levels are relatively stronger than the national average. And here, the improvement that we had seen in Texas was driven by an improvement in expectations. And as we see sort of, businesses there shutter temporarily, we could expect a little bit of a pullback in consumer confidence and in consumer spending as well. The same holds true for Florida. Here, really it was more of an increase in the present situation due to the reopening of the economy. But here too, we've seen a pullback and, a pause in activities. And that's likely to have an impact on Florida. And I think we can say that for several of the states as well, as we see sort of a resurgence. And I think that will also cast just a general cloud of uncertainty over consumers. And while they might still remain cautiously optimistic, I think the implications for spending could be a bit more negative.
Yeah, we also, I think, should not understate that, even though the concentration of new cases now in sort of southern and western states, the whole country could suffer from this, right? Because I think it increases uneasiness across the nation. So, you now hear, like, in New York, that they're thinking about perhaps slowing things down a little bit because they're concerned about possible both, spillovers from COVID-19 itself, but also economic spillovers from those other parts of the country, right?
Absolutely. I mean, a week ago, it was less than half of the states that were sort of seeing a resurgence. We're above 30 today, and all indications are that that's going to continue to increase. So we'll have some pullback in those particular states as well, and others, such as New York, as you mentioned, that are now taking sort of a second look at whether or not phase 3 will take place next week.
Yeah. So let's go back to the number for the nation as a whole and talk about the half full, half empty glass. So I think when we look at the present situation, it feels to me the glass is a little bit more half full in terms of the fact that people really see that things are getting better compared to previous months. Would you agree with that?
Yes, it's at 86.2. Let's just look back a little bit to March. We were at 166.7. So while we've seen a bit of an increase from where we were sort of in May, I think we're still a little bit sort of in this sort of weak environment. And in terms of how consumers are rating, current business conditions, we didn't see much of an improvement in those saying conditions are good. It was more of a decline in those saying they're bad. And for the job market, though, there was a little bit more, I think, optimism there. And I think that's just simply because of the reopening and more people going back to work. We still have yet another cloud hanging over us, and that's what happens when sort of these, unemployment benefits begin to run out.
Yeah, but what we saw there in employment indeed is that jobs plentiful increased from 16.5 to 20.8. So that's still about more than half of what it was a couple of months ago. But at least that is an improvement. But you're right. I mean, this whole issue about what's going to happen with stimulus plans and any kind of extension of benefits that could really have an impact on how consumers are going to think about it going forward. So let's look at the expectations here then. Because there, I think the glass really is a little bit more half empty. There, of course, people are saying, things are not as bad, they will not get worse, but there's not a convincing sign that things are going to get better in consumers' minds, right?
Right. It's almost like we've shifted into neutral territory, right? So we're less pessimistic, but we're not more optimistic. So we're sort of, kind of treading water, expecting conditions to remain more or less as they are. But as we've said, there's sort of a lot of uncertainty there as to whether or not there's going to be additional stimulus packages, or what happens when unemployment claims run out, what happens with the resurgence of COVID in a variety of these states. So it's too soon really to say we've turned the corner and consumers are going to go back to spending as they were pre-pandemic. I think we're still sort of facing a cautious consumer who's going to weigh their spending decisions.
Yeah. And I think it's the third factor in expectation. So we have business conditions and employment, but then the expectations for income, which I think are particularly worrying, right? Because there we really see no movement. And that has come down big way. But still we see very, very few consumers who think that, the situation in their income situation will improve. And that doesn't bode very well for the future of spending in the next couple of months, doesn't it?
Yeah, that does not bode well. In fact, that speaks to consumers sort of being cautious, weighing any sort of big ticket item purchases. We see that reflected as well in sort of total plans for major appliances. That's hasn't changed much since last month. And also, if you take a look at inflation expectations, that continues to tick upwards. If we take a look at where we were at March, consumers expected the average rate. And while they're not great predictors, it's really about the trend here. That's the key component. In March, it was at 4.5. We're up to 6.7 today. And a lot of that's being driven by, the increases that we're seeing in food prices. And I think now we're also beginning to see an uptick in gas prices as consumers start driving a bit more. So for any consumer who's sort of on a budget, this is going to create sort of a sense of diminished purchasing power, and it could restrain spending as well.
Yeah, I mean, it's actually interesting also to look at the consumer spending numbers, which obviously we don't have for June yet, but we did get them for May last week. And there also, we saw an improvement in May over April. But again, if you take at services, which was, of course, especially hard hit by the coronavirus because, places closed down and people couldn't go there. So we did see an improvement in services in May, but it was still a very limited improvement compared to the declines that we were seeing in March and April. So again, I think that also points in the direction that the consumer isn't entirely confident yet that this will be kind of, what economists sometimes call this V-shaped recovery that's all over the media.
Yes, I mean, I think what it did show is that, consumers were sort of eager and somewhat able to spend. However, it's still going to take us quite some time to really recover from this pretty, deep and steep recession. And it's going to take even longer, I think, for consumer spending to get back to sort of, pre-pandemic levels.
Yeah. So there are always kind of interesting questions what people want to spend their money on and what they're interested in. I mean, the question now, we're in June, so we're beginning to think about what we're going to do during the summer. So the question about vacations is particularly interesting. So, maybe you can take us a little bit through what happened to people's intentions to go on vacation. Is there any chance that, entertainment parks and hotels and restaurants can expect a big turnout in the next few months over the summer?
Well, we've had a pretty severe pullback there. So right now, 33% of consumers are telling us that they intend to take a vacation within the next 6 months. If we look back to December, right, where they were probably planning, their summer vacations, that was at 63.3%. So we've, dropped very dramatically due to the pandemic. It comes as no surprise that amongst those who are willing to sort of travel, the preferred means is by auto, and obviously within the U.S. And I think that's probably a little complicated now with additional travel bans, but it looks like sort of more localized, limited travel.
Yeah, it's also interesting to look at sort of means of travel, right? So airplane travel, I actually saw that went down even further, right? So people who plan to go on vacation by plane, of course, that dropped from, what was it, 30% normally to 19% 2 months ago. And now it's 16%. So it has continued to go down. So there's no recovery there. People are even more concerned about taking a plane now than they were 2 months ago.
Right, and it looks like because they prefer to drive as opposed to fly, that it will be sort of more local type of vacations. Sort of within a smaller radius than if one were to fly. Despite airfares now being sort of quite a bargain, but that just shows that consumers are still a bit uncertain, a bit nervous, and not willing to take these risks.
Yeah, because indeed, automobile transportation, that people is up from kind of 16% to 21%. So you do see some compensation there.
Right.
Okay, let's finally. I mean, we're not in the business at the conference board of predicting our own consumer confidence. So I'm not going to ask you what next month will be. But I would like to sort of think what do you think now for July are going to be the driving factors that will determine where confidence will ultimately arrive at? And we are sitting here again next month.
Well, I think the labor market, which has always been a driver of consumer confidence, will continue to play a key role, and the job outlook in particular. I think if we begin to see some apprehension there, that does not bode well for spending. And I think also just the extent of the resurgence. If this continues to become much more widespread, and we have more sort of pullback within the states, or temporary shutdowns, that does not bode well either for confidence. Doesn't bode well for economic growth. So it just looks like we're definitely facing several months of sort of an uneven, uncertain recovery, which I think really hinges then on what happens with these COVID-19 resurgences.
Do you think that an extension of unemployment benefits or the additional boost that we had to unemployment benefits, if that would come through, would it make a difference? I assume that would then primarily impact the lower incomes. Would you expect to see an effect from that?
I don't think that would translate into a boost in consumer confidence at this point. It would help those sort of on, the less affluent who are dependent and would benefit from this. But I just think it would not help necessarily with the degree of uncertainty that we are currently facing.
Right. Okay. Well, for now, we hope the best. We hope that we'll get not too bad job numbers, which are coming out on Thursday. And of course, most of all, we hope that this sort of, increase in new cases in parts of the United States is not going to escalate, because those are the really important numbers for us to look at for the coming months. So, Lynn, thank you for joining us and taking us through the numbers today.
Thank you.
This was your latest episode of Indications at the Conference Board, speaking about the latest Consumer Confidence Index for the month of June. If you like these broadcasts and other programs at the Conference Board in our podcast channels, then please go to theconferenceboard.org or to your own favorite podcast channels, and you will find many more opportunities to engage with us at the Conference Board. My name is Bart van Ark, Chief Economist at the Conference Board. Thank you and bye-bye.
This has been Indications from the Conference Board.